Good evening. After 3 days of profit booking, the Indian equity benchmarks once again came alive on Friday after the UPA government notified FDI in multi-brand retail, aviation, power exchanges and broadcasting, notwithstanding nationwide protest and imminent withdrawal of a key UPLI. In addition, media reports indicated that the centre could announce more reform-centric measures in the coming days to counter the lingering impression of policy paralysis. The Prime Minister may also address the nation later on Friday to explain the rationale behind the recent reform measures announced. The sentiment was also upbeat due to steady FII flows. Market experts see the positive trend in FII flows persisting after the world's leading central bank announced fresh round of monetary stimulus to push global growth. Also, with the government going on the offensive on reforms, the threat of debt rating downgrade has receded for the time being. More FII and FDI inflows will also improve India's weak external situation, while a successful disinvestment program might help the government meet its annual fiscal deficit estimate. The rupee could also benefit from higher overseas capital flows. The BSE Sensex was up by 403 points to close at 18,752, and the NSE Nifty was up by 137 points to close at 5,691. The BSE Small Cap Index and the BSE Mid Cap Index were up by 1.4% and 1.6% respectively. To add to the euphoria, Union Finance Minister P. Chidambaram said on Friday that the government has slashed the withholding tax on overseas borrowing by local companies to 5% from 20% at present. The reduction in tax will encourage Indian companies to raise funds from the overseas markets. Further, the Finance Minister approved the Rajiv Gandhi equity schemes aimed at encouraging increased participation of small investors in stock markets. Retail investors will get 50% tax rebate on investment under the Rajiv Gandhi equity schemes. The maximum investment that can be made under the scheme is Rs 50,000. The European equities rose due to media reports that the European Union authorities are working with Spain on a new rescue plan. The plan is expected to be revealed next Thursday as per a UK newspaper. The Stoxx Europe 600 index was up by 0.2%, led by shares of drug makers. The main stock indices in Germany and France were up modestly, while the indices in Spain and Italy were up by approximately 1% each. Asian markets closed mostly higher, with technology shares in the region gaining in the wake of Apple's iPhone 5 debut, while energy companies rose on high crude oil prices. China's stock rose, parrying the benchmark index's steepest 5-day drop in almost a year due to some value buying after this week's steep losses. Thank you. Wish you have a great evening ahead.